Welcome back, guys. All right, so all right, guys, we're gonna be analyzing USDT. So we're gonna start on 4 hour. So I made a mistake. I should actually go on the 30 minutes so that we can see where does the 30 minutes actually. All right, guys, as you can see, baby, go feel it headset. My love. Oh, and I headset. Ke berekisa mic. So we're gonna be looking at the nearest high and nearest low to start analyzing what's happening right over here, as we can see. And we're also gonna look at our left before we start doing everything. Now, to where the price is at right at here, we're gonna be looking at these lows right here, right? Because if you can check, first of all, looking at these lows, the price is so close to this area. So we're gonna look at like this area to say, okay, if you can check the last sell to buy on this area, which is this one, the last sell to buy, there was an order block. Which order block is that? This was the only order block that was there. But if we could also take with the candlestick responsible for the moving up, can take also that. So but then this is actually a very beautiful order block right over there, right? So this is the order block that breaks what? That breaks the structure, right? That's how we get to see it's the order block that break or that changes the character. Order block that changes the character, right? So this is the first order block to show that we're actually changing character to go to the upside. Now, as I get to see that order block, I get to see also that I have what? I have another order block over here, because because I have also what? I have a BOS towards the downside. As I have a BOS towards the downside, I also have this order block right over here. And this high created this low. At this point of time, we're gonna take, okay, created this low right over here, which was swept, and then market went up, swept by this low also, right? So this is the low, right? If you can check that now, okay, and which one is the high? This is the high. Now we are in between a what? An external low and external high. All this information is in just between, right? So I want to start exactly right over, okay, somewhere here. Okay, so we can start by maybe talking about this internal movement towards the low, right? So the first thing that I see, or I can talk about all this movement, right? So the first thing that I see is that now I had a low sweep. As I had a low sweep like that, market went back to the upside, doing what? Changing the character, right? Remember, when I have a low sweep, the market will go up and does what? The market will go up and target the previous high, right? Market will go up and target the previous high, and then we see that the market took out that previous high, and we have a supply zone over here, which is now at this point this one, right? So we get to see that, okay, market leaves a certain what high over there, which is this one, Market leaves a certain high over there. After market leaving a certain high, it then travels towards the downside. As it travels towards the downside, it doesn't okay, it makes another low over here. And then if you can check in lower time frame, we have an order block right over here. I don't know if you can take this whole candlestick, because if you can check, we have also broke the structure towards the downside right over here, because this has formed a low, a high, a break, right? Or we could say a change of character towards the downside, right? So but let's say BOS, right? This is the whole candlestick responsible, and then followed by another. All right, so let me just say it's this one. I can see that there is actually internal thing happening over there. Then we see market being like this one, becoming like uh becoming taken out. As it becomes a taken out, we get to see that we have another order block right over here. As we have an order block right over here, we get to see that we have another order block right over there. So we get to see that market sweeps the liquidity of the order block right over here. But another thing is that after sweeping there, it gets to an order block and then respects the order block, then travels towards the downside, right? I'm getting to where I want to get to. As it travels towards the downside, it leaves this one as a BOS to the downside. And then as that is a BOS to the downside, we then have an order block left. All the time we have a BOS to the downside, we will always have an order block left, right? We get to see that market now goes back towards the order block and then comes to the downside, right? Mm. 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 Kufaka pina. Ako yung matlaka-tlaka ke skandal che bujuriola. Alright, as we can see that market now did what, went back towards the order block, and then there was liquidity, it took out that liquidity. Okay, I want to start explaining right over here, because I think the 30 minutes, if you can just go and check, there's somewhere the 30 minutes starts. So I just don't want to explain every way. I don't want to waste time explaining every way. Okay, let's see. As you can see, yeah, right over here is where I want to start explaining, or I can also start by explaining right on this cell, right on this cell towards. Okay, so right, good. So now we are about to explain what's going on over here. How did market come to sell right over here? So now what happens, as you can take a look at our left hand side, we have a break of structure. All right, so I'm gonna cancel this one, so I'm gonna cancel also this one, right? So let's say the market comes all this information from here, it was not there, so it just saw that okay, market broke structure, leaving this supply zone, right? After market leaving this supply zone, we get to see that okay, on our left hand side we have we see that we have a movement like this, a high, a low that breaks, that changes character, meaning that the supply zone, which is this one at this area, is powerful. So at some point there you need to look for buys. Why we need to look for buys right over here? Because it falls on our in our trading plan, because our trading plan says that when we have a low that break a previous high, the low is a protected low. the low must be a protected low, because this significant, well, no, because this does what, because this explains the buy, the uptrend. This is the same as it's an uptrend, because we see previous highs being taken out, right? It's a breakout structure. So we're saying now that the demand zone over here are stronger. So if market is gonna come towards this area, right, even if it can go up, break down, but as long as it comes towards this area, we must at least look for buys, even if our buys are not gonna be like big buys, but then at least look for buys to the nearest supply areas, like here, because we don't know what might happen here. Market might continue going to the downside, but then for the fact that we know that this is the breakout structure of a previous high, therefore the demand areas will be powerful. The market will have to buy, depending on if will the market change character, when change character in which way. Okay, change character, like here. Will the market change the character? Will the market change the character, like here? Will the depending that if the market change the character, we therefore know that, okay, so therefore this order block is the one that's gonna take the market towards the upside, right? We therefore know that this demand area is the one that's gonna take the market to the upside, right? So what else do we want to so from here we know that we also, okay, if you can take a look at what, okay, I want to do this. If you can take a look at now this sell, buy, sell, change of character is the same as this one. 1 2 3 is the same, right? So meaning at this point of time, this one is the one that becomes protected. Therefore we should also look for demand areas, that will take the market upwards, right? That will continue the market towards the upwards. So it's basically the law. So now on that area, we're gonna look for buys, because we see a tap in the demand area that has broke structure, even though it's huge. Because if you can check something now, I want to show you something. We have the SMC on, we have the SMC. Okay, so I wanna do an example. I want it to be large, and I want it to be large. So how? If you can check now, we have structure forming in external highs and lows, and then we have structures forming in internal highs and lows. What am I talking about? This is a certain low, that's a certain high, certain low, breaking structure. So this is external because it's on hard time frame, right? So we see market breaking structure towards the upside. So we're expecting the demand zones at this point to be the ones that are powerful. Like when the market gets here, we're gonna definitely look at taking a buy, right? So then we see a low being formed and a high right over here being formed, right? Then what do we see? We get to see a market forming a low, right? For now, there's no breakout structure between this high and a low, right? There's no breakout structure between this high and a low, right? So therefore, what happens? A breakout structure comes in, breakout structure towards the downside. So this becomes internal breakout structures, right? It becomes the internal highs and lows between what? Between this external high and this low, right? Whereby we know that the next movement, according to this external structure, we are looking for the market to come and buy from here to here for long term. This is a long term trade. But what's happening inside here is short term trades, right? So what happens in short-term trades? So in short-term trades, we see that, okay, since when we have the break of structure towards the downside, this is gonna be a protected what? A protected high, meaning that the supply zones on this area are powerful. So therefore, what do we need to see? We need to see market coming back here and respecting here, and then targeting what? Targeting the previous low, right? Targeting the previous low. Which one is the previous low? This is the previous low. Targeting right over here. That's where we take profit, because we don't know what will market do. We might take partial over there and leave maybe 2 or 1 entry running. So we get to see that, okay, the market does what? Break structure towards the downside. Okay, same thing happens. Now we start taking this towards the downside. Remember, if the market breaks what? Breaks structure on the previous low, we now know that the highs becomes strong, and then the supplies also become very essential, right? Very beautiful. So therefore, that's all it. So okay, let's say now the market comes back there, then comes right here, then comes back there, then taps into the what? Taps into our external our major demand zone, our major demand zone, right? As we had some breakout structures right there, breakout structures right there, the market is finally uh, at our large demand zone, right? Is on our external demand zone. This is external demand zone, right? All these are external, like all these are internal, but this is external. This low is external, that high is external, this demand is external, right? But all that's inside the external, inside the external is internal. Good. So but then the last movement, what do we see before we tap in the market? We see that, okay, we still have the strong within the internal, we still have the protected high. Why? Because this protected high broke the previous low. So we still have what? We still have the important supply, very major supply. So but also we tapped on what? We tapped on our external demand zone, which has external protected low, right? External protected low. So therefore, what are we looking for? Now we are in a fight between this protected high and protected low, and between what? This supply and demand area. But for the fact that we on the high time frame, we have this one. On the larger scale, we have this one. On the larger scale, we have a breakout structure, protected low. We need to target this previous high, this previous high. Just like here, when we had a breakout structure, when we had a breakout structure, protected high, then we target the previous low, just like that. So right here, but if you can check, ne? So now what does the market says? Because of the external, the market says, okay, right here, look for taking buys. Now we take buys, ne? Right, look for taking buys. Okay, so we look for taking buys, we buy. Let's say we buy, put stop loss below the protected area. We know that our take profit must be here. All right, but there's one thing we need to be careful of. When the market comes back into this one, right, we still have that internal being valid to say the market is possible to still continue to go to the downside, right? Then you see what? You see market coming to the downside, selling, getting deeper into our order block, right? Getting deeper into our order block. So for those who just bought immediately, at this point of time, they are shaking, but they're not. They are shaking, but but as they know that they on larger scale, the protected low, the stop loss on below the protected low is safe, right? Even if market can do whatever it do, it should not get below here. But if it gets below here and take them out, it's okay. So now, what's the possible things that can happen right over here for them for this demand zone to end up like taking profit right above them? First of all, we need to look for this low. This low must be a sweep. This low must be swept. If this low is not swept, then we might have a problem, right? This low must be swept, right? That's the first thing that might happen. So if this low is swept, we already know that the high responsible, which one? This high that is responsible for this sweep, it's now gonna be what? It's now gonna be the target. Now what will market do? Market will go up, change character, then come back, then push and take profit, right? But only if this low is swept. So now what if this low is not swept? What happens if that low is not swept? If this low is taken out as a break or structure, now this protected high will shift to become right over here, and this also will shift to come right over here, right? Again, break or structure until a certain low is swept. That's when we know. So how can market be can sweep this low again? So market could now go up, ne? Let's say market goes up but does not reach our order block, then comes down, sweep this low. Like what did I say? As long as the low is swept, then we know that we are on a good side, that the demand will now win. The demand of the external will now hold. As this low gets swept, if you can check which high made this low. This low gets swept. If this low gets swept, if you can check, this low that is swept is created by which high? By this high, right? And then also this high, it's gonna be the target. So 1, 2, these both highs gonna be the target. Now the first high that's gonna be the target, it's this one, right? It's this one. So we see a sweep happening right over here, a sweep, then we're expecting the market to push high up, tap in here, come back, right? Because here there's what? There's a change in character, right? Internal change in character, right? But because we had a sweep of this low that was created by that high, we're expecting market to actually come here and push towards there. So do you understand, guys? So now what if this all of this that I've explained do not happen? What might happen? what might happen is that now the market might sweep this low instead of, so for those ones, they might be in trouble. When market comes here, they might be in trouble. So that's why it's so important to know confirmations, to know like the confirmations. Yes, you can take a buy, but then okay, I want to explain that. Okay, I'll explain that. So it's important to wait for confirmations that we have a low sweep immediately after the medication of the order block, right? So you can buy, yes, but then we're not sure because the market on the internal is downtrend. You get it? The market on the internal is downtrend, and as market makers see that we have a lot of stop losses waiting over here, what they do is that they let the market continue to be a downtrend, and then does what? Sweep the protected low, take the stop losses for those who went earlier. As they sweep, this doesn't become a protected low anymore, it becomes a sweep. If it becomes a sweep, we already know the high responsible for creating this low, it's now gonna be the one, and we know that all these highs that are here not gonna hold. So we know already that okay, now we shift, we sell right over here, we put stop loss below here on our sweep. On our sweep, we know that from there we're expecting market to get to our high. So it's so important to know on the order block that is the order block gonna hold, right? Right. So another thing that I wanted to explain right over here. So the first one is a sweep of a low right on after the medication of the order block, right? And then the second one is the sweep on of the order block. This one is a sweep of an order block. If the market sweeps the order block, we already know that okay, it's gonna go high, right? So the second one that I want to explain is this one now. Now we get to see that the market taps in there, then comes to a final point, going back towards what? Going back towards our okay, making an internal high and low in between this protected low and this low, protected high and this low. Yeah? Between this protected high and this low, the market is still what? It's still down. It's still a downtrend. Yeah? But we know that we tapped into the high time, the high order block, the high demand, which is gonna give us possible huge buys, right? We know that, but we need confirmations. So with our internal situation, what do we see? We see now that okay, we have a low over here. What's important is that we want to see if market is gonna reject it. We want to see market coming here and then sweeping this low. If market sweeps this low, we already know that our demand area, our this supply, it's gonna be a weak supply because we have a sweep of a low right after its medication, meaning that on high time frame what you will see is that you will see some sort of this kind of an order block, which is it medicated, came down. You will see this kind of of a candlestick against your so this candlestick, what does it do? It sweeps the previous lows and then close like that, which is a pin bar that shows that the sellers that medicated this supply to sell are being rejected. As they are being rejected, now the buyers are strong at this point and buyers are coming in. So therefore after this one, you will get to see market going way up. So the three things that we need to see when we get to an order block of on high time frame, we need to see if our internal downtrend, is it gonna is it gonna be over, and how is it over? Do we have a low sweep of the internal low? If we don't have a low sweep, then it's not yet over. Then do we have a supply, the characteristics of a failing order block by the supply, which is this method right now? Do we have that? If we don't have it, then we must expect the market to we must expect the market to sweep the order block. And then that those are the three methods that we always wanna be checking, right? So now I wanna delete everything and go back to one this step, yeah? One this step, ma one this step. Eh, kore batho ba fo ba roba so. Yeah. Mara government pila pila ga botse dira jwang ka GBV. Oh ma. Government is serious. Wa bolaiwa. Gape ka mokgwa ya fetelela o e bona. Hape ya fetelela. Khale abuse mbio. Now, what we want to be doing right here, because this is higher time frame, we want to be going to lower time frame to see if we can have a possible buy right over here. While we know that we might have we might be looking for take profit right over here, because the internal, as we can see, it has a break of structure, so the internal is a downtrend, but external, which is this one, we're looking for buys overall, but the internal still says we are downtrend, right? So we want to come here, look for possible buys, but on our possible buys we want to take profit here to be safe, right? Let's go there. Nope, we're not gonna find our possible buy, because like, remember, okay, maybe let's go to 1 hour. Yeah, we might find that on 1 hour. I wanted to tell you that okay, let's go down on 2 hour first. You saw that on 4 hour there was no sign of like buying. On 2 hour also there's no sign of buying. On 1 hour, is there any sign of buying? Okay, as you can also get closer to what's happening right over here, as you can see, this last sell to buy, right, that break structure right over here, the first indication to say the market will go up, which now we need to minimize this order block to here, to this one right over here. Okay, so couldn't see much right over here. No, I couldn't see much of a buy right over there, right? Couldn't see much of a buy, but what I see, what, you know why? Because like, if I would go to lower time frame, I think I could have seen that, but because like right over here it's just only one, that one candlestick, it might be, like, to me it's not giving me that good that good way. And the candlestick that I'm really looking for, as a candlestick such as like this one. This is a very beautiful candlestick that shows you that the market is going to change direction. Just look at the tail, it's so powerful, and the body is so tiny, so it tells you that now we're gonna done this one, the body is so huge than the tail, so like it's not giving that. So I'm like, okay, so let it buy. But then I think on 15 minutes and lower time frame, there was a way to have or somehow to see this kind of candlestick for me. At that time, I will take a buy. But remember, I was okay. We start selling here, right? On 30 minutes, on our 30 minutes, the market starts showing from here, then they going there. So now, what do we get to see? Let's say we don't take a buy, but we see market buying, right? So we're hoping that the market will get to this order block. We're waiting to take a possible sell, right? Because we can see that this is still a downtrend. So even if we are from our 4-hour order block, which is this one, but still we still have a 4-hour downtrend. We have our external demand, which is this one. Let's change it, right? Let's change the external demand. I want us to change the external demand to be purple. External demand, and I want them to be purple, right? Okay. And then the internal order blocks, I want them to, it's fine, they can be blue. So this is external demand. So you want to see market like overall buying right over here. But so now we don't see market like just buying just like that. So okay, for now, I know we could have took a buy right over here when we go to lower time frame, because I know on lower time frame we will find such candlestick like a pin bar, perfect pin bar, that will show us that the market is powerful to go up. Because pin bar is for reversals. Whenever you see pin bar, you should know it's for reversals and continuation, right? Good. So we get to see that okay, the market forms a high. Okay, the market forms a certain high. Good. So a market formed a certain high, right? So as the market formed a certain high, we do have an order block, right? We do have an order block. And where is exactly our order block? Our order block, remember, an order block, um, it's not always like the small candlestick before the large candlestick. No, like it's not always that case. So but then, because like over here we have the first candlestick to push the market upwards, we take that to become like the order block, right? This is the supply order block, right? Supply order block. I want this to be blue because it's internal now, right? So we see market leaving a high, and then there is a certain order block right over here, anger. So now another order block that we have is right at this tail, right? So yes, we have two order blocks within that. And also within here we have another order block, which is like this one. Okay. So now I want okay, so now the market formed that high. As the market formed that high, it came towards the downside. Every time, guys, the market leaves order blocks. There's no way market don't leave an order block. Each and every movement, if you get to see a huge candlestick coming in, okay, so for the first time you see the market, a huge candlestick coming in, that's an order block. So here, where is an order block? So if you can take a look at this candlestick, so this was the sell to buy, then large candlestick. That sell to buy is an order block. Okay, so from here to here, this is an order block, right? This is how we draw this order block, this kind of order blocks where we have this candlestick and then followed by a long candlestick. It's how we get to draw the order block. Why are we drawing it this way? Because explaining this, it's like the market started like sell, buy, then sell, which like kind of in smaller time frame break this structure. So this whole sell to buy buy to sell is the one that is the order block, because in lower time frame this is exactly how this like two candlestick look like on the lower time frame. And then within this order block we have two order blocks. We have this large order block and the small order block, which is what this is an order block. Why? Because it's a tail that it's not touched. It's a free tail. We do not want to see free tails in the market, right? We do not want to see free tails in the market. Just like today we saw a free tail, and the free tail was like an amazing trade. So we want to see when market gets here and when market gets here, and the market gets right here and when market gets here. Okay, so far those are the order blocks we have, right? And then all right, we get to see market going back up, right? I want to explain so we get to see that market gets into this order block at 4 a.m. This is 4 a.m. as you can see by this candlestick, and then it's 4 a.m. and taps into the large order block. Most of the time the large order blocks, they do work, but then yeah, they do work most of the time, but then we prefer another between this and this one. We would prefer this one because like it's deeper and it's the unmedicated tail that is free. Market loves the unmedicated tail that is free. We still have like a huge imbalance within here, so market needs to go back and like fill up this imbalance. Okay, besides that now I said that when a large candlestick comes, there is always an order block that leaves the market. Always, that's how the market does. When the large candlestick comes, there is always an order block that the market leaves. So if you can take a look at before the market taps into this large demand area, there is an order block, which is this one right over here. Can you see it? Exactly. Why? Because this is the sell that buys, right? Breaking the previous high of the previous candlestick. So this is an engulfing candlestick. It's like the engulfing method. The engulfing method always leaves an order block. The engulfing candlestick, which is this one engulfing, and this one is engulfing, which is engulfing this previous candlestick, engulfing the previous candlestick. The engulfed candlestick, which is the previous candlestick, is the one that becomes the order block. So now we get to see we have what now? Demand and supply, right? Demand and supply. So right on our demand, you can take a sell towards our supply, right? But then it's bad because like as you can see, it's not gonna be a long trade. It's not gonna be a long trade, so it's just gonna be a short trade. But by this candlestick, what I like, what I see over here, and what I like by this candlestick, it will, when it comes, it changes the direction. Look at this. This is a candlestick that rejects buys and then allows sells to come in. It is a pin bar. A pin bar having a tail above. That means selling area is now happening to where to for the market to come into our demand area, right? For the market to come into our demand area. Good. Slender says flexible. Salfi. All right, so beautiful. So now within here, I was gonna explain why, right? I was gonna actually explain like what's happening right over here. Okay, and another thing that I would like to explain right over here, right? Okay. My babe. Wabo. Won't you serious? Won't you serious? Because pelum bicha kort one bitch. So now what's happening over here? I want to tell you something, né? Within, you see this candlestick followed by this falling candlestick, followed by this selling candlestick. This pin bar now, it becomes the order block because it becomes the decided candlestick, né, for the market to go down, right? So you should know in future that this is an order block, but in terms of here, we're not looking for this candlestick to, like, for this, we are looking in between this, we are looking like in between, like this demand and this supply and this demand, and we know that this supply is not strong because we're looking for the market to at least fill up this imbalance and also come to this best order block, which is a tail. It's always the best one. Tail is always the best, guys. And there's something that happened to this tail. If you could take a look, something that happened into this tail. What happened? This tail got swept. Can you see that? By this one. Yeah, it got swept down. This tail, if you can check, if you can like open your eyes very carefully, this tail has been swept. Let's try to resume that a lot. Zoom this like in a huge way. Can you see that this tail has been swept? So yes, beautiful. Okay, that's okay. Right, so now what happens? So by this tail, we get to see that, okay, this is a pin bar rejecting buyers, allowing sellers to come in. So these sellers, they are coming in to where? To our supply, which is this one, to our supply area. Now, I wanted to explain that why is not the market just selling, maybe it's buying, because we have a tab in here. This is the first tab. Why? Because this candlestick, it also looks like a pin bar which have a tail below. Why is it not buying same time? Okay, I wish I could explain that on lower time frames, right? But this is a candlestick that does not even sweep, because remember when I said that to see that the order block on the large scale will actually have a buy, we need to see some like a sweep of a low or a sweep of a previous candlestick. We need to see that, but by this candlestick we don't actually, we don't see any sweep happening. So we don't just want to forward like a repape and jump in the trade. No, we want confirmations. And I think on smaller time frame we have supplies that keeps on pushing the market to the downside, then followed by this one. Now this one sweeps the previous candlestick and it's a pin bar, right? Why is the market not selling? Right? Why is not the market selling? So I wish I was able to explain this. I wish I was very able to explain this. But because we can't go to 5 minute or 15 minute, if you would go to 15 minute, you'll see that on 15 minute we're actually having something like this. On 5 minute we're actually having something like this. The market keeps on breaking structures towards the downside. You will see something like this. Market keeps on breaking structures towards the downside. So when you get to like look at your 5 minute, there's no any low sweep on your 5 minute, or there's no any change of character on 5 minute. Market keeps on breaking structure towards the upside and leaving the highs. So therefore, with your sweep that you had, you will see a sweep right on 1 hour, but when you go to lower time frame, you get to see that this sweep is actually going back to the order block, and on the order block or on the lower time frame, we still confirm that we're selling. So it's not yet time to buy up until our lowest time frame gives us a sign. So to see that the market is actually gonna buy, we see that on our lowest time frame before, right? Before buying, right? We will firstly see our lowest time frame, like maybe 5 minute, 15 minute. That's what we will get. How do we see that? We will see that by change of character. If it's not change of character, we'll see that by a sweep of a previous candlestick. If not a sweep of a previous candlestick, we'll see that by a pin bar coming in, which gives us a pin bar, then a huge an engulfing candlestick, then we already know that we have now a supply zone, and our supply zone becoming like becoming what becoming respected. Then we get to see what there's a possible way, and then when we get to look at our high time frame, we want to see if our high time frame is gonna correspond to our low time frame to take the buy. That's it, bro. We actually don't use high time frames to actually take buys. No, we use our lowest. Okay, on we get to like we just look at our high time frame for the market to see what, okay, now it's getting into low into our order block. Onto our order block, that's where we get to look into the smaller time frame to confirm that is the high time frame gonna buy or what. So what are the things that we need to see in our lower time frame happening? The sweep of previous lows. Definitely here it's gonna be sweep of previous lows, because like just like here, if you can check, this is a previous candlestick according to this one, but if you can check in lower time frame, this is a sweep of a previous low, and I'm definitely sure that you will find a sweep also on the previous lows, right? A sweep of a previous low. If you have a sweep of a previous low, then and then what is this candlestick? A sweep of previous low on lower time frame. Then you get to see some changes of character after the sweep of a previous low, or a sweep of a previous low that's leaving an order block, or an engulfing coming in, then leaving a small order block, then changing character, and then on higher time frame you get to see a sweep like that of a previous low. Okay, now let me explain it. If you look at these three candlestick, 1 2 3, this is how you get to see it on the 1 hour. But maybe if you get to 5 minutes or like 15 minutes, you will get to see something like this on the 15 minute. Huge move, then market coming back to the order block. Oh, you'll get to see something like this. This is the sell, this is the low, and then supply zone over here. Then you get to see some sort of like maybe low sweeps right over here, low sweeps right over here, as these low sweeps will push, first indicate a change of character. After indicating change of character, comes right over here, and then as it comes right over here onto the supply zone, onto the supply zone, which is this one, on lower time frame, when it comes here, that's when this one closes, and that's when we get to see that this low has been swept. That's when we get to see that on high time frame this low has been swept. Then from there, what do? We already know that if this low has been swept, but and then right here we have what we have, like low sweep, lowest low sweep, change of character. Now we know that the area to take buys, market should not, because like over here if you can check, we are on a supply, market got into a supply, change of character, and we know market has to come to our order block. We already know that this is a protected low. This small low right over here is a protected low. That's when we get to take it buy. Hence you see market came into our demand areas right over here by this candlestick, then we had a buy. Bro, this is beautiful, bro. What I'm saying right now is so much beautiful. I hope you understand it. So that's how we get to, but then I hope tomorrow we go to our 5 minute chart, then we start doing the 5 minute chart to confirm, to look at how the relationship between the small candlestick, the small time frame and large time frame. We'll get to do that. Then that will be the final area. So by here we get to see that, okay, we now have this candlestick sweeping the previous candlestick, and sweeping the previous candlestick, and maybe on lower time frame it will change character. There will be a sweep also, maybe changing character, or there will be a change of character. Then we already know that our supply areas right over here, it's gonna like make sure we're going up. So right after this candlestick we want to buy, or we want to wait for the market to at least come drop back into our supplies, and then on small time frame, and then take it buy. Right, So someone would ask, why did you not sell this area? Yes, you can sell this area, but remember, I said like selling this area, it's like bad because it's just very close to our demand area, so you'll just need to risk very high and take profit as soon as possible. But taking a look at here, the risk reward ratio is very beautiful because we have a long way to ride. We have a long way to ride, as you can see there. And also we still have a supply, so we therefore have to make sure that the supply works. Okay. Ana lo bona ra ona matswela mara ka point aka faka matswela mara matswela a bonagala babe ke jwale ba rena re ba tsebe rena re tseba ke. So someone will say now okay, we confirmed because remember when I said to see that we have this order block is gonna work, we need to see like low sweeps. Remember, low sweeps. Then a low sweep is happening, or previous candlestick sweep, pin bar help coming in, pin bars coming in, just like here a pin bar came in, sweep the previous high, then we went to the downside. Over here, this pin bar came in, that sweep the previous candlestick, then market went up. That's what we need to see on a order block. So what if someone comes and say now we get to see a failure of an order block? If this was a failure of an order block, we was gonna look at market coming into this supply. When we bought, yes, we are buying, so market comes into the supply and then leaves a huge tail, like exactly this candlestick, after tapping in here then closing here. That's when we was gonna be taking a look on lower time frames to sell and being ready to know that okay, this is gonna be, not this one. This one is the one on lower time frame. This one on lower time frame. This one, it's not opposing. It's the one that's confirming and coming back to the order block. Sometimes like people get to be confused with that. So good. So that's how we buy it. Very good. Shit, azange ke ya makuleng. Uthanda. Betul balu taat straight. Oh yeah, we need to go to the teenage right. E a fé da Joana tem. Let's talk about. I think we just haven't done. Trying to talk about. Ai, não bisa ba? Ya wala ni na. Ana ta ne ko ne. Beautiful. Let's go to 30 minutes and see if now are we gonna have a buy right over here. Okay. I was about my favorite move game. Oh, unfortunately we don't have it. Can you see that? The only thing we had is this buy. Alright, so alright, let's go back there. I've explained a lot for that, but it's okay. It's okay. Like my explanation was like valid. My explanation was very valid, like and interesting. Alright, so cancel that. Now market goes to our unmedicated area. Right, because now if you can take a look, we are still in between the high and the low. Right, this order block was the one to help us to get into the unmedicated order block. So right, we need to see if this unmedicated order block will hold. Right, if this unmedicated order block will hold every order block. When we get to in this market, we look, we pay attention what is happening. Is this order block giving us some sort of like we need to do that, pay attention on every order block, more especially on this one because this is unmedicated tail, right? Very good. We get to see market tapping into the order block. And how does it tap? It taps into the unmedicated order block and then sweeps the previous candlesticks. If you can check, sweeps the previous candlesticks. Right, after sweeping these previous candlesticks, what happened? The candlestick that sweeps the previous candlesticks and that taps into the order block, it's a pin bar. Pin bar tells us to go to the downside, right? Tells us to say now go to the downside, sell, right? Sell. This is a pin bar, meaning right over here, this is a what? This is a protected high. Then we need to sell the market, right? Okay, so as we sell the market now, because we have the characteristics of a good order block where we need to see a tap and then some sweeps of previous lows or previous candlesticks and a pin bar coming in. That's valid. We saw that happening. Tap in the market, and then if you can take a look, market leaves a pin bar. As it leaves a pin bar, we see the previous highs has been swept. That tells us that the next movement is towards the upside or towards the downside. We saw, then we put stop loss below, right over here. Right, immediately when we put our stop loss below, right over there, still holding towards this low or still holding towards this order block. And again, mm, actually got healthy pay. Yeah, we're more young guys. So we're still holding, right? We're still holding. We're looking at market to actually like do that, like. But then, unfortunately, we get to see market sweeping. We get to see market closing by this candlestick against us. This means that alright, we're losing this. Why? Because if you can take a look at this close, it shows that our our order block has now been rejected. Our order block are showing the characteristics of a failing order block because we have the market going to the downside, but immediately we see low sweeps, right? Low sweeps and then a pin bar going against our what going against our sell and going against our order block. Therefore, this means that what's the target? It's either the market can buy very heavy towards the upside, or it's either the market can target only the high of the order block to sweep the high of the order block and to take out people like us. All right, at this point of time we lose this entry, we lose this trade, right? We do lose this trade because of this candlestick that shows us that this order block will not gonna hold to the downside, right? Unless if we then see this happening in smaller time frame before the market can get into our loss. But I don't know, unless if we can see it on our small time frame. But if we cannot see it on smaller time frame, then it might be something like, oh damn, it's bad, right? So another thing that I want to talk about now is that, so what happens when the market does this, when the market start giving us the characteristics of a failing order block? That's when we get to cut our losses. It's either we cut our losses or we lose, right? At this point of time we lose because we can see that our already the market closed at the area where like we have put stop loss just exactly just right there, right? So now we wait for the market to actually, now we know that as this happens, it's either the high, it's the target, only the high. The market just wanna sweep the high and then continue going to our direction. So this means that we had people who sold very early. And there's a possible that, because if you can take a look over here, we have a break of structure, right? A break of structure towards the upside. There is a possibility that we have the order block responsible, which is invisible right over here, responsible for what, for this break of structure on lower time frame, because the lower time frame could have done something like this, maybe come here, leave an order block, then break. Then when the market comes over here, respects this to give this order block a fail, if a fail, the characteristics of a failing order block, for it to, for this market to target the high of the order block. So this is the possible that could have happened towards this, right? So you need to check also what happens exactly on those like order blocks, you know, because them, and comparing it to the higher time frame, you already know that, oh, here we're gonna be out because I see 1 2 3 happening. Then if you can take a look, the market sweeps the high, the previous the high of the order block, then comes in back inside, right? As it comes back inside, it comes and closes right over there. As it closes right over there, we already know that, okay, this now becomes our order block, right? This becomes our new order block. And as you can see, we have another the old order block over here. So what's the deal here? So because we have a sweep over there and this order block right over here, first there might be a possibility that the market hits right on this order block, come right back inside here, then continue to the downside. This could be the best opportunity the market could give you, but because we have a high sweep, this order block is not gonna hold. So immediately after this candlestick, according to what's happening right, oh yeah, no, this cell is there. Let's go to smaller time frame. This cell is there on our 30 minutes. Let's get to look what happened right over there. Maybe we might have some beautiful information on what happened right over here, over there. Right, there you go. This is what we have. Where is it? Is it this one? No, no, it's this one. Imagine. Yeah, nah, with no, it's here. Bad. Nah, it's here. Okay, good. Alright, so that's why I say we need to move now, bruh, because I want us to like show the relationships. Okay, so finally the market comes to to this order block right now, to this order block, right? As market comes in that order block, now there's something we need to look at. Okay, what happened for market to come into here? Okay, we need to open our eyes very big, like very slightly, right? If you can check something over here, it was a sweep, but this sweep is so small such that like some people are still in the trade, were not taken out, right? So we get to see it. Okay, so this forms a very beautiful double top, which makes it liquidity. So as it makes it liquidity, we definitely have to look at the nearest order block for this to actually for to help nearest demand for this to help the market going towards the upside. As we get to see that this demand became was taken out, this demand was taken out, right? Okay, so therefore the nearest demand was this one, was either the large or the small one. Okay, but then we need to see what happens, right? Beautiful. Same thing that I was explaining. Let's see, this is a break of structure towards the upside, right? This is what a break of structure towards the downside, and we have an order block. Now remember, how did we draw this order block before? We said we also include this candlestick, right? Over here we also include the candlestick. So where is the order block? This is the order block now, right? This is the order block now. That's why you get to see market coming in here, going back before even coming to the tail, right? That's why you get to see that happening. Now I think in smaller time frames, this you should have like seen like this in a beautiful way. But another thing that I would like to say about this is that like the first sign we had was this one, right? But the market did not go up immediately, right? The market did not go up immediately. Maybe on lower time frame there was a supply over here that brought again the market towards the downside. Now we get to see that the low now gets swept. Can you see the low gets swept and the market leaves a pin bar? So therefore that means what? That means now this one market will never come right over this low. This low must be the protected low. Therefore that means, okay, therefore we need to look for a small down lower time frame demand right over here for us to take a buy to where, not to here, right? All right, we might take it to here, but not immediately to here, because remember you need to trade safe, right? First take profit is here, second take profit is above there. So now what happens? The market sweeps the previous candlestick by this candlestick, right? Leaves the second, it sweeps it. A sweep says it. A sweep does not joke around. A sweep says it. Sweep of a previous candlestick on an order block. Okay, that, and if you can take a look, there is a rejection below. Then we look for a possible area right over here to buy this market. So we buy this market right over here on the possible area right over here, right? And then where is the first take profit? Here is the first take profit. Why should we firstly take profit right over here, right? This is the first take profit, and then this is the second take profit. Yeah, the question will be, why do we have to take the profit right over there? Now we need to take first profit right over here because of one reason. This supply, it's still valid. Why? And this supply will do what? Its target is to get the market to get to this low out, right? So that's why when the market gets here, when the market gets into our order block, we need to therefore go into our lowest time frame. On our lowest time frame, we don't want to see the characteristics of this supply area holding, but we want to see the characteristics of this supply area on the low time frame failing. But in this time, in this way, in the way it formed, we see the characteristics of this order block holding, right? Holding. But we don't know if it's gonna take out our low now. But we see maybe what? Maybe we see change in character, come back to the order block, then goes to the downside. That's maybe what we see. So therefore, after immediately when we see a change in character, come back to the order block, we withdraw. Maybe we take all, right? Maybe we take all and leave one and see how will the one handle this situation. And then we leave one, and then maybe we put stop loss immediately right over here, or maybe above profit. As we put stop loss above profit, to get to see market takes it out. Okay, so we fully out in the market, right? Fully out in the market. We sold. So each and every order block, market will indicate that this order block will hold. Each and every order block. I'm telling you, go to smaller time frame, you will see that this order block is about to hold. You will get to see the characteristics of a holding order block and characteristics of an order block that will fail. I think after this session we need to go on YouTube and check for characteristics of order block that will hold and characteristics of order block that won't, that will fail. So I guess on this, like on this order block, on within this candlestick, like this tail over here, on lower time frame like 5 minutes or 1 minute, we had some sort of changes in character, go back to the order block, then sell. That's when we had to run away, because we saw that okay, there's a possible, okay, because, so I could say this is internal demand, but external demand, but we still have internal supply that says we broke structure, then there is a supply, so this supply must continue it's what its duty, right? So then as the market comes towards the downside, we get to see this candlestick coming in. What is this candlestick? This candlestick, it's now what shows on the higher time frame. It's now what shows that we definitely in what is it one? That we definitely in that we definitely now having the characteristics of a failing supply, and then meaning that the external demand has is holding, and the internal supply is failing to hold. Because why? We get to see that okay, after this candlestick, market yes went to the downside, but it was supposed to take this low. It failed to take this low, but did what? Went back up. As it went back up, what kind of like candlestick did we have? What kind of situations did we have? If you can take a look, we had so many sweeps, this sweep, that sweep, and this sweep, right? So we had the previous low candlesticks being swept by a pin bar, showing us that where we're coming from is not powerful. We reject where we're coming from, we reject the supply. So therefore we need to we need to go against. So therefore, after seeing this, that's when we approve that okay, this supply is gonna be out, and when this supply is gonna be out, the market did this because there was also like liquidity above this supply, so this supply didn't have to continue holding towards the downside. So therefore we see the characteristics of a failing order block. Therefore we need to, from here, after immediately after, then we need to buy the market going towards the upside. First take profit is here, second take profit is there, right? Portal changes or chill. Much better than a jade. Yeah, fair. Alright, so let's continue. Yeah? If we would continue with this, I'd like to add some like few situations to show that like that supports this, to say that this it's gonna be an up moving, uh, like it's gonna continue moving up until our order block, right? We need to also have such information when market goes back to our order block. When I'm two pairs. When the market keeps on going back to our order block, we need to have such confirmation, like such information, whereby it's like additional and it's like additional information, and that helps to also maximize profit, like enter more entries, immediately you see that confirmation to say that this is a continuation confirmation up until our order block. You keep on adding, okay, cool, right? So we took this entry right over here. So now after taking this entry, what was like the thing that you was like that explains the now information? So now this order block to me, okay, we had this order block again, then we have another order block. So this order block to me wouldn't actually like stop the market at all. This one wouldn't stop the market at all. Why? It's above like, it's just right on the liquidity, so it's not what I'm looking at like to say no, it will affect me. This one is totally not gonna affect me because it's exactly right on the liquidity, right? Okay, so now as I see market keep on pushing towards the liquidity, I see a bit of a sell, then a push towards the upside. Very good. That's what I always want to see. So if you can take a look at this candlestick, this is an engulfing candlestick. It's a long candlestick, right? So this engulfing candlestick leaves a demand area. Now we know that if market can come back here, we're gonna look at ways on adding our entries, because this is a way where market shows that we're gonna continue buying, right? So and this could be used to it's either you add up entries or you put stop loss below. So this is where you can put stop loss below, right? This is where you can just put stop loss below here, right? After confirming, you put stop loss after confirming that it will hold, because sometimes market comes below and sweeps. After sweeping here, it then goes back up and then continue. That means when a stop loss circle, like you went out before even taking your full profit. What you need to do, firstly, you know that this is an order block. Each and every order block, we confirm it that it's gonna work. We confirm everything. We don't just say, okay, since when this is an order block, that means you are protected, stop loss below. Sometimes market knows that you put it your stop loss below here, so it will save it. So it will save to not for you not to win much but to win less. Then takes out this low and then sweep this low. After sweep this low, continue buying. Then you are out, unless you continue buying with it. But you can't keep on coming in the market, leaving the market, coming in the market, leaving the market, coming in the market, leaving the market. No, can't trade it. You can't trade like that. We need to only take one buy and leave, and then keep on monitoring the buy. So now we see that we have this one. This confirms that the market has a way of, has a possible way of continuing, right? So therefore it's either by sweeping this low, or it's either by respecting this order block, right? So as we come, we get to see that okay, this market leaves this long engulf, long, like doji kind of like candlestick. So we'll be like, okay, are we done? No, we're not done. So what's happening? To confirm this candlestick, we need to see the following candle coming through. So we get to see that market pushes towards the upside. After this push towards the upside, that's when, after this push towards the upside, that's when we confirm that, remember, when we have a doji and then we have another candlestick going up, we therefore confirm that okay, the direction is still continuing towards that direction, towards upside. Then that's when we put stop loss below here. As we put stop loss below here, we still want to do what? We still want to make sure that we buy, we add few entries, 1 2, right? As we add few entries, that's where you get to see market even like takes profit. Or you just put stop loss below here and then you leave the market doing what it has to do. Then you get to have your TP happening, right? TP, and then like our TP comes on this other, on this one, because as you can see we also had like this Molanyana breakout structure. So this became the order block, right? Then our TP get hit, right? As our TP gets hit, we just took out what? We just took out our order block, right? And this, guys, this is the most important structure, right? This is the most important structure. Why am I saying that? Why am I saying this is the most important structure? Then when you go to SMC structures, you'll get to see something like this, like on textbook structures. You'll get to see something like this. Good. What is this? What is all this? This is liquidity, right? And this is a low that formed a high, and then that low, it's like taken out, right? Taken out, right? And then right over here we have what? Right over here we have the order block. Then you can see that the market leaves the liquidity first. This is a very high high setup, where you do not need to hesitate when the market comes into your order block. You just need to just only confirm, then go big and go for this low. That's right over here, right? Because market does what? Forms liquidity. After market forming liquidity, then you'll get to see market going back, taking out the liquidity. Then you just have to know that this is the best in the SMC strategy, because this internal that was here just gave us liquidity for the market to push to the order block for it to come and be taken out. Now, since when we are on 30 minutes, let's go and confirm how the cell looks like. Alright, so remember we saw this very beautiful order block on 1 hour. We saw it on 1 hour, it was very beautiful. And then we saw also this kind of like candlestick which was doji on 1 hour, right? Now get to see how it looks on 30 minutes. Look at how it looks on 30 minutes. Just take a look at how it looks on 30 minutes. looks very awesome, it looks very beautiful. Why am I saying it looks very beautiful? Because there's this strategy that says now your order block, your order block, no, your tail that is not medicated is powerful. It reverses the market, right? But sometimes it does not. And how do we see that it's not gonna be, the market is not gonna reverse at this point of time? It's when we get to see like sweeps of previous lows, like exactly how your order block fails, like because like this tail is an order block by itself. And look at these candlesticks. These candlesticks gives you the characteristics of an order block that fails, whereby we see the tap, then we see market coming to the downside, but then we see again pin bars against that order block, pin bars against that order block. That means the market shows you that this is a order block, but we're gonna break this order block because we have the pin bars that gives this order block energy, power to break this order block, because it's not, at this point of time it's not gonna work, just doesn't have to work. First one, second one, or from the first one might maybe risk a bit. Second one, that's when you be like, you know what, this market, this order block is not gonna work, let's join. Oh yeah, the best way to join was like on the, and putting stop loss maybe was like below this first one, right below this first one. You can see, very beautiful, very beautiful. All right, so now I want to talk about how did this sell come, how did this sell come in. Now we see a tap in the order block, right? That broke structure right over here. A tap, and then followed by what? An engulfing candlestick. An engulfing candlestick. When there is an engulfing situation happens, that means we leave an order block. We leave what? An order block, right? So let's go to 1 hour. Let's see what happens right there. As you can see on 1 hour, our first area, I mean like our situation on 30 minutes, we see what, we see an order block. We see, like, remember on 30 minutes we need two candlestick to happen, like for 1 hour to happen, we need two candlestick for 1 hour to happen. On 1 hour, what do we see? We see a doji. And then when we go back on 30 minutes, we see a supply being left, whereby we see an engulfing taking place. Then that's when the supply is being left, and then we are being like, okay, there's a possibility that this order block will take us to the downside. Good. Now okay, so now when, if the market comes back into our supply, we wanna risk going towards the downside, because that's a what, that's a supply, and the supply on it's a supply on it's just internal supply on an external supply. You get it? So right over here we want to have a sell at after 3. We want to have a sell right over here. We don't care, but right over here we want to take a sell and put stop loss below here, and then go all the way to this take profit. this below here. Again, you remember how I showed you that best SMC recommended um recommended setup where we have a market breaking structure towards the downside, leaving an order block, and then the internal situations forming liquidity before it could go to the supply and go to the downside. This is the situation. Now we are on the supply. Now we want to make sure our supply, where is our take profit? Our take profit must be on the previous low, not on the lows of the internal, must be on the external, and the external low is this one right over here. It's this low right over here where we take exactly our profit. So yeah, this is what happens. We get to see market tap into our order block, leave this candlestick. As it leaves this candlestick, we get to see a market like kind of like we're taking a look at it, and we're looking at it. You see market coming back there and sweeping the high, then going down, right? Sweeping the high of our candlestick where we entered and then going down. But immediately we get to see the market coming back to our entry levels. And if you can take a look at this is the exactly this candlestick right over here. It's the exact candlestick that looks the same way as the candlestick that we used before, that we took a buy before when I was explaining. Where? Here, this one. Remember, I had what? I had a supply over here where market medicated the supply, went down, but then gave us this candlestick. Over here, we had a medication of the supply, went down, and then gave us that same candlestick that looks like this. Let me tell you, my friend, you need to go to lower time frame to look at what's happening on lower time frame, right? Because like it's not all the time. People get confused somehow. People get confused that, hey, so when this one came in, is this a failure of an order block? Yes, on 30 minutes it represents a failure of an order block, but on 5 minutes it's back on an order block. On 5 minutes this is something like this. This push towards this order block that broke structure, because we see, as you can see over here, we broke this low. We broke some sort of structures right over here. We left what? We left an order block. So this from here to here, it's this candlestick. So it's only going through, and remember, we from our huge supply, we changed character. Let's say we change character. It's only going to our internal supply, but on 30 minutes you will get to see one candlestick. If you go to 15 minutes, you'll get to see 1, 2 candlestick. Then leaves on 5 minutes, you see market aligning from here, then going towards the downside. Come on. I'm teaching you, right? I'm teaching you. In our mind, we already know what the market might do and what the market is willing to give us. So don't get confused when you see this one. I know this is the characteristic. This is a candlestick that shows the characteristics of a failing order block. But truly, go to the downside and look at what's happening. Look at what's happening. Go to the downside. Look at what's happening. You will see that the downside is totally disagreeing that the market should continue going up, but it's agreeing that there is a smaller time frame supply again that says the market is back at that area, and it's giving again the characteristics of that small supply zone taking the market to the downside. Don't feel scared, brother. We are here to make sure we win. Right. So you remember, as I was telling you, that like in each and every um our way on taking profit, there will always be like areas for continuations, to confirm continuations and to adjust stop losses. Market gives us those kind of opportunities. you know so I see it on 30 minutes right on this language, and then let me go to 1 minute and see if 1 hour and see if I'll also see it, ne? And then we don't go to 2 hour. I want us to also go to 2 hour and see what kind of like candlestick we had on 2 hour. Maybe on 2 hour we might have a very beautiful pin bar. All right, we don't see a very beautiful situation over here. As you can see right over here, this candlestick is an order block. That's why market had to react when it got right over here. That's why market had to react when it get over here. But this is not a powerful order block, because we're looking at taking profit on the previous low. Previous low is right this one. All right, previous low is this one. So we're looking at taking profit right there, and all this demand, okay, this one is out, it's no longer like valid. The only one that's left, it's this one. Like all these other blocks right here, we are not afraid of it. Babe, kuka ngwana o. So we don't see the continuation our on our 1 hour, but I showed you on 30 minutes. Now I want to see the candlestick that kind of like came in on 2 hour. I don't know if I will see the candlestick that I'm looking for, because I'm looking for a certain candlestick right there. See, okay, that candlestick is not there also on 2 hour. The candlestick is not all there also on 2 hour. So do you see that this shows the characteristics of a failing order block? Just because you see the top and then the go down and then the rejection. But on lower time frame, it's a change of character. The market is giving us, on the lower time frame, the market is giving us a downtrend already. When the market comes here, it comes to a certain order block to push towards the downside. When that order block confirms that we're going to the down, so we already know that this was just a comeback in smaller time frame to the order block, so that the market could go to the downside. You get it? Okay, so also on this like unmedicated area, we don't see. Okay, so let's go back to our 30 minutes and like discuss how the continuation came up. Like how like the remember, the market gives us like ways of entering, continuing with the market to sell, and also uh taking our stop losses down, right? As you can see, this is that unmedicated area right over here. You can see market taps into this area. After market tapping into this area, number one, what do we see? We see this candlestick coming in, and what type of candlestick is this? Is a pin bar. Now this pin bar, it's what's telling the market that we're gonna go towards the upside. But we have a specific we have a specific high, which is the high of this candlestick. We want to see what market does when it gets to this high of this candlestick. There's a possibility that the market will it do? Will only sweep this high, or it will respect the tail that is not medicated of this candlestick, which tail am I talking about? Take a look at this tail. This is a tail that's not like touched. Since when market came into these lows, it was not touched. When market went up, that's when the candlestick was touched, right? As we get to see that candlestick, that tail is now medicated, and after the tail becoming medicated, what do we see? We get to see a sweep of the previous candlestick, right? So this becomes the sweep of a previous candlestick. As this becomes a sweep of a previous candlestick, what type of candlestick, what kind of candlestick swept that previous candlestick? It's a pin bar. So it's a pin bar coming, medicating the order block and sweeping the previous candlestick, right? So by this, we already know that the target is the next movement. The next movement is whereby the market will go towards this low. It's actually going to target the low of that candlestick that has been swept, since when it's already like it since when it also went back inside the unmedicated tail. So therefore, immediately after this tail, we're gonna sell. We're gonna now immediately after this tail, we're gonna now drop our stop loss from here to here. We're gonna drop our stop loss from here to here. Then market goes down, because we saw the confirmation. As market goes, we saw the confirmation, and then we could also say that we add another entries as the market goes down. We add another entries, putting stop loss below there. We add another entries, then continuing the market to go towards the downside. Or we could also say that this is the protected high right over here. This is the protected high, so we would wanna see market like not coming above it. So somewhere there, halfway, let's put the stop loss, and we put it. We put like what, like the stop loss of these old entries above here. We look in stop loss. We look in profit, because we already see that okay, this is what's happening. Eish, bas ka rra setje baba. Ba rra setje. So there you go. You see it happening. It happened. Alright guys, very beautiful. As you can see, this is all the information that you also need. Sometimes also this information is what you need to see. This kind of information is a candlestick information, where like we kind of like use previous candlesticks, like what happens on the previous candlestick. Do we have a sweep of the previous candlestick, or what happens? Like it's a candlestick approach, whereby we just use previous candlesticks. Yeah, it's this approach over here, it's called the previous candlestick approach, or candlestick approach. And it's very beautiful. As you can see, market takes the profit. rata gore ko jump watch wa tsa gore motho gore bala ga botsa gore betse mo letsogong na gago. Alright guys, very good ne, very good. Okay, so we are back on 2 hours, and then just actually want us to go back to 4 hour. Morobatse pe ngwana se tso wa mo lebelela bo o swere ke boroko tlha mo faka ka dikobong morobatse khurumetša dikobo. Kgang dintšhang dintšhang bothata bo mo kae bothata bo kae. Guys, we are back. Sorry for going. I should. As I'm back, I'm about to now take a look at the order block that I'm talking about. So now this is the order block that I'm talking about. You can take a look at this order block. Hence, I'm saying that okay, there is an okay. I'm gonna take I'm gonna delete this order block at first, and then take a look at now. As you can see now, there is like this order block. As you can see, there is this candlestick that broke structure towards the downside. Now we need to look at what happened to the market when it broke. Alright, we get to see that when we okay on 4 hour now we get to see that this is the only order block that breaks structure and then comes to the slopes. But the other block that we have is which one is right at this order block, right? Then now when we go back onto our and take a look at what's happening down there, we then see another, if you can take a look, there is another liquidity. So the strategy comes back again. There's another liquidity above right over here, which is there. There's another liquidity right over there. As you can see, there's another liquidity over there. Okay, so the order block that we had, it's actually this one right over here to here. This is the order block we are having. Now we wanna also see that okay, coming back to our low, is this a break of structure? Around 4 hour we kinda saw a break of structure. And 2 hour we also see like a slightly break of structure. We go back to 1 hour to actually see we actually have a break of structure right over there. When we come back on our 2 hour, we see 1 hour. We actually see that no, we actually not having a breakout structure at this area. We have a sweep, as you can see. There was no body break this low. You can see what happened. You can see this candlestick sweeps the previous low. The following candlestick sweeps the previous low. Okay, right over here. Again, now have one of this candlestick now sweeping this previous candlestick low. Then market goes back up. As market goes back up, then there comes what? There comes market stepping in here and then pushing towards the upside. Right? as you come back on like 30 minutes, you get to see that at 8 o'clock the market kind of lived this kind of projections. As you can see on this low, like it shows us that we're actually gonna have a what a 10 on exiting this low. As you can see, we get to see the next movement becomes an engulfing candlestick towards the upside, which now becomes this, which now this whole order block becomes the order block, because as you can see we have what we have them engulfing candlestick. Now we need to go back on our lower time frame. Our lower time frame like 15 minutes and also 5 minutes to also confirm if we have a buy over here. And then as you can see, the candlestick that we actually had a sweep on its low, it's actually this candlestick. And if you can take a look at the low of this candlestick and its high, you can take a look at the high of the candlestick. It's right at this is the high of the candlestick. So we're expecting actually from here market, we're expecting market to go up. They see that market comes back into the order block. As it comes back into the order block, which is this one, then in lower time frame market leaves out some sort of candlesticks that can respect this order block. We see that the order block, we have like characteristics of an order block that we hold, then the market hold towards the upside. So you will need to look, you will need to, at this area. I don't want to take it myself, but then what you need to do is that you go and look at in a smaller time frame. In smaller time frame, what you will see in smaller time frame, what you will see is that you will see the characteristics of factors that shows that this order block is going to push towards the upside. Okay, so you might as well just take a bite over here, right? Another order block become manufactured, which is this one. As you can see, this is another order block because we have the engulfing candlestick engulfing the previous candlestick. Now, as you can see, what happens? Okay, now what happens is that market forms a high. As market forms a high, it leaves a high and then tap into the order block. After tapping into the order block, it comes to the unmedicated area of the candlestick, then comes towards the downside. As it comes towards the downside, we also take a look at what's happening right over here. It also comes back to the unmedicated area of the the candlestick, and right over there, look at what happens. The market gives us a very abantwana babona ama-right. Right, guys, welcome back. It's the following day in the morning. Good. So let's continue and talk about what we have been like talking about yesterday. I was where was I? Right. So I was based on this law to say is this law a sweep or what's going on? Like looking at 2 hours, it seems like this law is some kind of like a sweep. Then like I wanna go to lower time frame and also confirm that do we have any sweep right over there? So like very beautiful. Just go down there. As we can see on 1 hour that yes we have a sweep. How do we say we have a sweep? Because the candlestick that has break this low itself, it broke that low with a what, with a tail, right? And then the following candlestick swept the candlestick that has broke that low with the tail. So the sweep that we have is right, it's actually here. And then yeah, the market started going back towards the upside. All right. So guys, another order block. If you can check at what happens over here, we have like this is a high time frame order block. We have another lower time frame order block, which is now this one. Now, from here, which is from here to here, also this other block was like fake, did not actually be able to push. Right over here, if you can take a look at right what's happening right over here, you could see that the market is actually giving us some type of like bullish reversals, right? So I want us to go to 15 minutes. I see something happening right over here. I want us to go to 15 minutes. Right, the first, right, I want me to talk about the first candlestick that taps into this order block. Look at it. This is the first candlestick that taps into the order block, followed by a pin bar that shows that the next movement is going towards the downside, right? The market went to the downside, right? As it went to the downside, we had another pin bar showing us that the next movement should be going to the upside, right? When going back to the 30 minutes, does 30 minutes really support that? Right? This is where we hit the pin bar. This is what I'm talking about. If you can take a look at what's happening, we see this candlestick is the one that taps, right? This candlestick is the one that taps and then goes, and then what happens is that the next candlestick goes inside the unmedicated area, which is this free area, comes in here, and when it comes in here, it starts going to the downside. That's where on 1 hour we saw a pin bar going to the downside. After seeing that pin bar going to the downside, what do we see next? We see market coming um, into this unmedicated area right over here. As it comes to this unmedicated area right over here, it also respects this unmedicated tail. By why? How does it respect it? By leaving a what? By leaving a tail in here. By leaving a pin bar. This pin bar shows us that now, since when market was able to come in here to medicate this other block, so the first take profit, it's gonna be obviously like we looking for this one. Secondly, we looking for this one also, you know then continuously. And as you can see, this is our order block. So this is our order block, which is the unmedicated tail. So we want to see what we want to see market um respecting this area, right? Respecting this area. As you can see, market comes towards the downside and then leaves a pin bar. All the time, whenever you see a pin bar, you should just know that it rejects sellers and then allow buyers to come through. After it, this at 2 o'clock should have like came with a buy. Let's kind of like look at the candlestick at at at, at the 1 hour time frame. End of the commento. Okay. So the market says that at 2 o'clock exactly, you need to be buying the the market. As you can see, also the 1 hour also gave you another pin bar, as a following another pin bar, and then as you saw on the 30 minutes that we also had that pin bar, right? So we had that pin bar at what time? We had that pin bar at 1:30 to 2 o'clock. So already at 2 o'clock, it shows and tells you that now during 2 o'clock we need a what? We need a buy. So this is where we at 2 o'clock. We buy the market. This shows you that the market is actually on a continuation. Like we have like what? We have like areas where we see market is respecting. The first area to the market respected is this one right over here, this order block. Secondly is this order block, because all these are order blocks. This is the first order block. We see that we have we have an engulfing, and this engulfing came in the market. As this engulfing came in the market came back right over here. I think when on 15 minutes you could have seen like the kind of candlestick we look for and the kind of situations we look for in this order block that gave us this buy. And then this another engulfing, which leaves this one to be an order block. Market taps in there, and then you know, that's when you get to see what I've been explaining right now happening. And I'm wondering now, like, as you can see, this is another order block that is beautiful. Now this order block gets like in 30 minutes, this order block becomes what becomes refined, because as you can see over here, that's where we have another um what we call this. That's where you get to see that we have what we call um, we have um, imbalance. We have so much imbalance over here, and then we have the order block that which says it's a small candlestick followed by engulfing candlestick. So we see that the market needs to trade right to that order block, right? So market, as we take a buy right there, market goes back there. So another order block that we have is this one. Why this one? Because this is the small candlestick followed by a huge candlestick. That's an order block, right? Then since when this market came right over here, swept, um, I was like looking at the market to say, hey, since when we had a sweep right there, is the market gonna like, what is it gonna do? Is it gonna come and sweep these lows right here? I'm wondering. Unfortunately, we get to see market going back up, right? We get to see market going back up, and as it goes back up, it leaves this as an order block, as you can see. This becomes an order block. How do we see that? We see that we have a break of structure. We also see that we have a break of structure right over here, and then I told you that how do we see an order block? This is how we see an order block. So that's an order block. So what does this help you with? This helps me with in this buy to actually like within this buy to actually do what? To actually take my stop loss and put my stop loss below this order block, and also wait for this order block to for wait for the setup on this order block um to actually see if this order block is gonna hold or is gonna be a fake order block. But in the meantime, we see that okay, market is coming deeper into this order block. So what happens when we get there? Our stop loss is below here. We're waiting and looking at what the market is doing. So number one, I want to talk about this medication. Someone will say, why did the market medicate the order block right here and not just go up the same time? Like I said previously, that market will come here and medicate the order block. But if you go to lower time frame, like 5 minutes or 1 minute, you will see like there was a certain structure over here, or supply over here that is so strong that pushes the market towards the downside, and so the market keeps on doing, leaving the highs and then taking out the lows up until we see a sweep in the lower time frame, up until we see a change in the lower time frame. That's when we'll be like, oh yeah, we see now that there is a change in the lower time frame, and we see that like change in why in which way we need to see in our lower time frame a change in market structure. We need to also see a sweep of liquidity, or a sweep of a previous candlestick, or a sweep of a previous low, or a pin bar in the lower time frame, which gives like a pin bar and then a rally, like what pin bar and then followed by an engulfing candlestick, because that itself leaves an order block. So we already know that okay, we have an order block, and then we go compare the situation that we saw on smaller time frame with the situation on larger time frame, like 30 minutes, 1 hour, to say, is our small time frame gonna hold? Is this order block gonna hold? So therefore, we get to see that the market gives us this. We get to see that the market gives us a pin bar, this pin bar, right? And if you could check something, I want you to look at something. If you can look at the high of this candlestick, the high of this candlestick, the high of this candlestick, take a look, the high of this candlestick and the low of this candlestick, what do you see? Looking at the low of this candlestick, do you see a body break on the low of this candlestick? No. What do you see? You see a tail break. So within this high and low of this candlestick, we call them externals of, hey bruh, this is like, it's large scale and small scale, large scale and small scale. So now within this candlestick, what do you see? You see that we have a what, a low and a high. So everything that happens here in the lower time frame will be what, will be internal. So therefore you get to come to like lower time lower time frame, then you'll see market maybe breaking of structure, but after breaking of structure, coming back and like breaking the previous candlestick above, on larger time frame like this one on 30 minutes. But on lower time frame, what you will see is that this candlestick will cause this, in smaller time frame, in smaller time frame, this setup, this two candlestick will give you a certain movement, like something like this, and then change in character, then come back in the order block, then push. But then in what, in our 30 minutes, we get to see that, okay, so the low of the the low of the candlestick, of the external candlestick has been swept. That's the first sign to say we're gonna go and target the high. And then when you go to lower time frame, you get to see the change of character. You see a new high being formed. Which one is the new high being formed? This is the new high that is being formed. Where is it? This is the new high that is being formed. This higher, this in lower time frame, this is a high, and this is a previous high. So and then another recent high is this one. So you get to see that a new high has been formed, and if a new high has been formed, that means we have a break of structure, and that means the low of that candlestick, it's gonna be a strong low. So therefore, this is a strong low. So from here, when we come back on our 30 minutes, we always see that, oh, we have a sweep of the external low. You see a sweep of the external low. So that means as we need to go to lower time frame and look at how we can take a buy right over here. And then we come somewhere right over here, on lower time frame. Take a look at where can market can possibly reverse within this candlestick, within like order blocks on these candlesticks. And then that we find out that like somewhere down here, it's where we have a proper candlestick. So therefore we like buy. And then what I like about this buy is that this is a new buy, and then with the old buy we have like what we have stop loss. We have stop loss on the old buy, and then we have stop loss on the new buy. So like it don't be that much bad, young bump. But then with what happened, with what is happening right over here, already we know that the market has confirmed how, because of the low of the previous of the large candlestick, the low of the external candlestick has been swept. So therefore the high of the external candlestick needs to be targeted. And on lower time frame, we can see that we already have a change of character, and so the demand zone on the lower time frame would be powerful. So that's when we get to see the market moving towards the upside like that. But what the skill that you have actually over here, it's a very top skill. Like, I won't lie to you, this is a very top skill. We like, somebody will need this skill, bruh. This is a very top skill that you have right over here. I want to actually go to I want to actually start going to 5 minute and 1 minute, but then we'll also do 5 minute, check out 5 minute, but also 1 minute is better. I want us to do that and also be able to like look at how did the market actually respond to such moves. So as you can see, market like goes up, like leaves this liquidity, you know and that's what it has to do. So now if you can take a look at what happened, this candlestick becomes like buys, but then reject the buy. As it reject the buy, we can see that we are still protected, because why? We have the unmedicated area. We have the unmedicated candlestick. So there is a way that the market can still be like like we can still be protected right over here. And we won't move our stop loss because it's very like tight, it's very beautiful, it's not a large stop loss, so it's beautiful. So, and because we have the unmedicated area, so now this is the same as what? This is the same as this one. As you can see, the market came into an unmedicated order block and did leave what it was supposed to leave. It did confirm that this unmedicated order block will push, right? And also here we have the unmedicated order block, and you see that the market does what? Uh, respect the unmedicated order block, right? So what do you see? You get to see that, okay, so the next candlestick that taps into this unmedicated order block becomes a what? Becomes a pin bar. If you can take a look at the tail below, the tail below is it's like a long tail than the tail above. So this allows us to go up, right? The next movement we are looking for is that we are looking for a buy, right? We are looking for a buy. Because why? Because as we can see that this candlestick has swept actually the previous candlestick is low. So that shows us that, okay, this candlestick that has showed us that the next move should be a sell. Yes, this candlestick showed us that the next move should be a sell. But what are we selling to? We are selling to into a very strong level that is the unmedicated order block. So when we are selling to this strong level, will the market go down? No. We need to be like, there might be an error that the market is not gonna go down here, so we need to be careful of like just taking a sell. We might take a sell, but as soon as we see market like like saying no, this is not where we can take a sell. We need to say we need to be like, okay, let's withdraw. It's not a sell. For those ones who took a sell, they needed to withdraw up and when they saw this close of a candlestick. So it's beautiful, guys. So we see that, okay, how do we then take a sell when we are on a or where when we are on this order block? Like this order block is a supply order block. This supply order block, it's powerful. How do we then take a sell right over here? Why should we take a sell right over here? We need to wait and see what the market is doing right over here. We need to like wait and see what the market is like pretty doing right over here. We know that there's a way and a chance and a possibility that the market might not break this level, but it might reject this level. The next candlestick might be a pin bar being against this candlestick that says the next move should be a sell. So as you can see, true, indeed, that happens. We see that the market does what? Rejects over the unmedicated or tail. So over that unmedicated tail, we see a pin bar coming in, sweeping the previous low. Then we be like, okay, so if you didn't take a trade here, if you didn't take a trade here, you might as well take a trade here. Or even if you took all these trades wherever you took them, you might as well just do what? Just add up entries. Might as well just add up your entries, like up until market gets into right over here. Might as well just like add up your entries, you know. So you might as well just add up your entries to what? To the order block, right? So we went into the order block. So now we tapped another order block in our what? In our 30-minute order block that we have refined, right? We have refined this order block. And remember, the guys, that we come from a previous sweep. Like, I need you to know that like we come from a sweep of like a previous low. And when we come from a sweep of a previous low, like all the demands that we're gonna come against, they're not gonna hold the market. They're just gonna sell like short sells. That's what they're gonna do. They want to be like giving us short sells. That's what we should be aware of. Like we have this previous sweep. So this previous sweep, it's already telling us that like we might actually go higher, but because we have a breakout structure here, there's we also looking at maybe one of the supply zones over here, like taking the market a bit towards the downside. But we also need to confirm with our internal supplies that I mean internal demands, because those internal demands are the ones that are strong, because we come from a low sweep. Even though we have a breakout structure, like if I would explain this situation, né, you can take a look at this structure. This structure, it's like some horizontal move. this structure is inside the box. Like if you can see what happens, market comes here, leaves a high, and then trades inside. This becomes internal, then leaves another high, and then comes right here. Then you get to see that this low gets swept, right? As this low gets swept, which one will become like a target? If you can check, the market has been trading within this box. So there is a possible way that the market can even go higher. And within our box, we see that there is a large liquidity actually above them, right? We came down, we swept the lows. That now we get to see that the market is trading towards the upside as the market is trading towards the upside. Okay, firstly, we won't focus immediately on our on like market targeting our liquidity, because why? We have a break of structure, so the market still have that that authority to say, since when we have a break of structure to the downside, we still have like these supplies that can still hold. You get it? We still have the supplies that can still hold, but this does not mean that the market will actually take this low. I mean, like these supplies will actually force the market to come towards the downside and take this low. They will just be like short, like very short. Depends. Very short. Sometimes could be just like trading into lows again, then like going back up again. Since when you see like market like over here, it has been like playing around a lot. So there was a possibility that maybe when the market comes here, it could come a bit down right over here, just taking out all this liquidity, and then now then before like all, then we get to see a large movement going towards the upside. But at this point of time, because of this low sweep, okay, we knew that okay, there might be a possibility that there was no supply that's gonna hold, but only demand that's gonna hold, because we come from a low sweep. So very beautiful. So like now, okay, we see Uguti. All right. So now we need to keep on going up. So we have refined our order blocks, as you saw on the order blocks on 30 minutes are different, like from the order blocks on. Look at this buy, bruh. This buy was amazing, though. The order blocks from our 1 hour are different from order blocks on the 30 minutes. On 30 minutes, we can refine and have clear, beautiful order blocks. Just like over here, if you could go to 15 minutes, I'm definitely sure that you'll find a refined order block within of this huge order block. So now on 30 minutes, we get to see that this is the first area to take profit at, right? And then we still have another order block right there. Which one is it? This is another order block that we still have, that we need to look at the market. We need to like comparing these two candlesticks. The one that's powerful is the one that is like with a tail that is not medicated. A tail that is not medicated is so powerful. We need to look at what the market does when it gets there. So very beautiful. So now what do we get to see? Now we took a buy like that. As we took a buy like that, remember, for the market to like take that buy in lower time frame, this is a certain high, right? In lower time frame, this is a certain high. So in lower time frame, we have a break of structure. So we indeed have a what? A break of structure. And then we have a what? We have a low, right? This is a low. So then we also have what? We also have our order block. Why is this an order block? This is a demand order block, because we broke structure and because we have the small candlestick followed by an engulfing candlestick. So that becomes a demand zone, right? So we get to see like market coming back towards the downside, coming back towards the downside. And I think like we need to explain each and every movement taking place in the market, like how would market come towards the downside. Because if you can take a look, we took our profit, we're done with taking our profit. Now, I think in here you need to go to your smaller time frame, like 5 minutes. What you'll see, you'll need to wait for like there will be a supply left, and then like you also need to wait for like changes of character, and then you'll see market like melting towards the downside. I think the best one you could have seen over here is the change of character, then market going back towards the downside, right? So yeah, market changed character definitely, then went back to a supply, then went to the downside. So it came to the downside, but as you can see, our downside is a strong demand area. It's a strong demand area. I really don't see my order blocks. Oh, oh. So I couldn't see my Asian high and low, so I need. Mm, yeah. Now we can definitely see our our Asian high and low. Can definitely see it. Now what happens right over here? I don't know why my mic is green. Ish, I hope that like it's recording my voice too. Yeah. So now what happened? We get to see with okay, between this order block and that order block, which one is powerful? All right, they are both powerful, but the one that is way too powerful is the one that is not medicated. An order block with a tail. It's a tail. The tail, it's like market has to go there. It's like liquidity. It's like where market has to go. Then we see like market medicating the large tail, the large order block, then coming towards the downside. Okay, the large order block has done its part, right? Has done its part. So we are on a internal uptrend, right? On an internal uptrend, we know that we take what? We take the highs out, right? We take the highs out. So as the market comes into the order block, what do we see? We get to see that okay. So market came into the order block. What kind of situations do we need to see in the order block? We need to see what? We need to see like a pin bar happen. We firstly need to see a pin bar. If you don't see a pin bar, we need to see an engulfing candlestick coming in. We know that when market comes back, there will be a demand, internal demand being left them, and then we would wanna see that demand order block taking like over. So now what do we see? We get to see that okay, the confirmation that we had over here, it's okay. Let me use this one. So if we can take a look at this order block right over here, we have the high of this candlestick. I think we need to like pay attention on what's happening mostly when the market comes into the candlestick that engulfed. So we see that this is the long candlestick that has engulfed like the previous candlesticks. Like so now we want to see what happens when market gets into the order block, right? And what we see is that look at what happened. We have the low of the large candlestick and the high of the large candlestick, which in lower time frame at this point of time, this is a certain low and that is a certain high. So market prints the certain high and then goes towards the certain low and then sweeps the certain low. As the market sweeps the certain low, what are we expecting? We're expecting the high to be taken out. So you see that like what's happening over here, we have like the laws of sweeps coming in like as much as possible. And what type of candlestick is that? We could say over here we see like the external low has been swept. That's powerful. That's very powerful. Number one. Number two, we see also that the previous candlestick has also been swept. That's also powerful, right? And by what? By a pin bar altogether. That's powerful. So after when we see a pin bar all the time, we should know that the next movement is actually going towards the upside. So after this pin bar at 3 o'clock, at 1:30, we're taking a buy. And then we know that now where are we buying into? As you can see, I need you to check one thing. We have the Asian high, we have the largest liquidity, right? We have the largest liquidity, which is the Asian high at this point of time. And the market was going towards the upside, right? So what's the possible thing that could happen right over here? So the possible thing could be like this order block that we are trading into could become liquid, like could not hold. Why? Because it's right exactly on the liquidity that we want. All the time we want to see the Asian high being taken out, right? So like it's either you hold, take profit over here, or if you wanna be safe, you take profit right over here. Okay, so like or you'll take all profit out and then you will leave one running up until here. But most of the time if we have like the Asian high right there, we trade into it. But then because this is like unmedicated, let's be safe. It's unmedicated, let's take profit right over here. we take profit right there. It's beautiful. We take profit right there. As we see right now, we have a what? We have a break of structure. Oh, well.